So, good morning, active traders. Welcome to our Trading Week Ahead broadcast. I am the originator of the Week Ahead concept, now widely copied, and tail of the tape also copied by certain talking heads out there that know who they are. Bye, bye, bye. Anyway, I'm widely copied. That's okay. One thing I wanted to mention is I do have the All Access Pass. As we get underway with today's session, let me give you some free videos first. Go to crushwallstreet.com or TradeMastery. That forwards over to TradeMastery.com All Access. Just a quick commercial announcement before we get underway with today's session. Compare not only the success rate of my alerts. I've been running my live trading room for going on 20 years now, celebrating our 21st year this year, tradingtheopen.com. Download some of the videos of Christmas week, just a couple of weeks back. And I'll update these now and then, and also the swing scans. So you can try before you buy and see the quality, the professionalism, the honesty, the authenticity, the success rate, the performance of the alerts in real time, captured on video. And so that's kind of a good way to preview some of what you'll get as an All Access member. So do be sure to register for that, and I will be including a few $100 worth of downloadable courses if you order. Now, if you order today, and today only, I will also include a 20-minute personal phone coaching call with me. Now, my schedule's slammed, so it's probably going to be like middle of spring, like March, April, May, before we get that scheduled, but at a time that's mutually convenient. And by the way, I'm opening that up for all of my All Access members. Anybody who's still currently who's ever in the last, since I originated All Access back in June, I think, if you're an All Access member, hit me up for schedule a phone call with me and get a 20-minute personal phone coaching call with me to go over charts together and the rest of it and answer questions as a bonus. And for those of you not yet All Access members, take a look at the page. It describes what you get. Over 400 hours of webinars with me. It's a one-year program, and it's only $9.97, so it's cheap for the number of hours you get. The main thing I'm proud of is the success rate of the alerts and the positive feedback I get from all the world's traders. There's so many thousands of folks. It's good to be doing the right thing. So enough of that. Hey, before we get started too, let me ask you I asked my members this Thursday, I think it was, type in a letter right now. All of my All Access members are also going to be getting complimentary access, included free, in my inner circle or VIP club or whatever I end up calling it, in which we'll do additional mastermind included free webinars and that are, maybe the middle of the day when things are quiet, be able to give you additional resources and coming up with ways to extend, because I have so many new members as All Access folks. I want to add additional value, and I want to come up with the fancy name. Can you guys do me a favor as we get started? Type in a letter. Which one of these sucks the least? They all kind of suck. They're not great. And like one of my traders, Sherry, said, and I agree with her, and my daughter said this too, if it matters, these are all a little bit hypey. They're not great names, but they're the best we got. If you have a better name, let me know and type it in. I'm looking for ideas for what to call the VIP club that my All Access members automatically get free membership in. So that's included. I always like to push the bar forward and over deliver. Type in a letter if you would. Your vote counts. We'll resume in 15 seconds while I sip a little coffee here. And we'll take a look at our markets and charts that are worth trading this upcoming week. But type in a letter. Which of these do you think is the best? I like to keep it short and sweet. They are all cliches. They're all well used for 20 years. People in various industries have used these type of names, but if there's one that stands out, let me know. I would sincerely appreciate it. And we'll get underway. Wow, I see all these names scrolling by. Hey, Jim, I like that. Trade Mastery Pro, that's a good. Trade Mastery Preferred, I like that. Actually, those are pretty good. Thanks, Jim. And actually, today I got a Jim and a James. Jim said Trade Mastery Pro, James said Trade Mastery Preferred. I like that. Those are good. Keep the ideas coming. Let me hear your guys' ideas. And I promise we'll get underway here momentarily. Anyway, I want to come up with a name for you guys, kind of like in football, 1st and 10, touchdown, it's a field goal. Like great names like Seattle Seahawks, alliteration is good. It starts with the same, like Trade Mastery Tycoon, something that starts with the same letter. But anyway, let's get on with it, Calhoun. Do we have a sell-off ahead? All information is for educational use only. Learn from people like me with P&L proof that we are actually traders. Again, when it comes to educators, most of them are chart talkers, but not proven traders that don't have any P&L proof that they actually traded recently, like my 9,000 freaking trades in 1 year, right? 9,000 this year, this past year, I did 9,000 real money trades in my Fidelity account. I've got a boatload, I won't use cuss words, I've got a boatload of experience to share with you guys. And I also show tax return proof that I actually know what I'm talking about. So anyway, with that, let's take a look at our S&P. What the heck's going on? Market moving events up ahead. China, Wednesday, phase one. Has it been a matter of buy the rumor, sell the news, which I suspect is the case? There's actually been the market's been going up on vapor. The market's been a momentum driven on vapor. There's no fundamentals, no earnings support, no meaningful progress with China, just some lip service, blah, 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 blah. America bombed, fell over in the Middle East, and it's shocking the VIX didn't spike over 20 with that news. The market is on thin ice and about to crash and burn. I've been saying that for the last couple of months, so I've been wrong, frankly. I thought the market would drop long before now. This is reminiscent of the 99 bubble market, and it's just a matter of time before the market crashes. You need to be prepared to profit from that, number one, and manage risk, number two. Actually, number one's always risk management, number two is profit. But anyway, we have a bearish engulfment here, slightly in the S&P as of yesterday. That is a bearish engulfing. So the price that proves the market wrong is a loss of 32.60. We'll see if we break above resistance. Following our VIX, we're way down here. The VIX tried to spike yesterday into the close, as did TVIX and our other VIX instruments, but it's still not up at a 2-day high. So unless we recover at least that 1320.50 SMA, I wouldn't. Big picture, everyone's looking for a break and a hold over 15. The 12 to 14 has been the range in the VIX. Keep a careful eye on volatility this upcoming week ahead, and be ready to sell any open swing trading longs if the VIX starts to spike and hold, especially over 15. That's valuable intel. That tip alone is worth being here for. The other things I want to look for is what's going on in sectors. Do we have any sector strength? Not really. Pharmaceuticals have been great until Christmas, but then the Grinch stole pharmaceuticals thunder and it's been sideways and slightly down ever since. Our semiconductors, which had been the story sector of the year, or one of them along with healthcare, also similarly slowed down right at the new year and haven't been going sideways. More compelling is weakness in small caps in the Russell. If you look at our IWM, this is the ETF, you can see small caps are down for the year. And big picture, they have not been a strong sector. They've been down compared to the S&P, the Dow, and the Qs, the NASDAQ. So for that reason, it makes sense to be cautious right now. Take profits. Take the money and run, son. So if you're long, say, here's picks, just a few of the many winning picks that my members got recently. If we get under, say, 490 in GGP, that would be a sell signal, right? See, and I demonstrate in the live room so often, and it was such success. That's why so many thousands of folks have joined me over the last 20 years. It's not so much to make the money on the way up, it's to keep the money when the market drops. And I don't know how many of you share the frustration of you staying in something like, frankly, I've done to my taking stops and say some of the bounce instruments like TVIX, it runs up, and then instead of selling the breakout like you're supposed to, I hold on because I think it's going to keep running up, and then it crashes back down, and I lose the profit, unrealized profit that I would have otherwise taken. What I'm trying to say is, in this market, you absolutely have to use trailing stops. It's very important that you trail stops in this market. You can use hard stops as well, and often what I do is a hybrid. I'll have half the position with it. And it's another lock and load strategy I cover exclusively at my Trading the Open and Swing Scans events. Is You want to position size with a trailing stop on half your shares and a hard stop on the remaining half, preferably at break even once it runs up in the money a few points. So if it's gone a few points up for you, trail a stop and also use a hard stop with equivalent position size. Does that make sense? I mean, for example, I'm long TQQQ right now because I'm a rock star. Boom. But I'm nervous long TQQQ, and I was going to sell it all. I would have sold it all yesterday if I saw this bearish engulfing. But I was downstairs putting exercise equipment in my living room for the new year. But anyway, if TQ's, it's all the way up here right near 100, you always sell the 9s, right? So I'll rebuy TQs if it breaks over, say, 102, but I'm currently long this instrument. I'm going to sell it all if it gets under 92. That's a trailing stop value. And let's say if you're in, I don't know, 100 shares, the correct strategy would be to say put 50 shares with the hard stop at 92, another 50 shares with, I would use a 4-point trailing stop on TQs in case it does keep running up. And that way you're covered. If it does crash, both the hard and the trailing stop will get taken out. If it pulls back a little bit, then keeps going up, you'll still be in the money. Other charts of note. And that's really important that everyone understand. I mean, that topic alone is, and I'll cover more on that in swing scans coming up in a few minutes for all my swing scans members, but it's really important that you use a more dynamic, intelligent, price action, volatility-based approach to making money in the markets right now. Because we're skating on thin ice, and it's just a matter of, I'll say minutes, I mean, not literally minutes, but metaphorically minutes, just a matter of days before we start to see likely a big drop in the market or a spike to the upside, more likely a drop. We've got earnings releases coming up next week and the week after. It's earnings season. It's widely expected that earnings will not match the momentum. There's a big, huge gap between momentum and fundamentals right now, and that gap translates into stock market's going to crash. All right, so use my 2-day strategy. Watch for all my competitors to copy it too, because they're lame asses. But and they know who they are. I'm so widely copied, even by TV personalities. You know, I published an article called Tale of the Tape 12 years ago or 15 years ago in Active Trader magazine. I pioneered the week ahead concept. I own the domain Trading Week Ahead and have for many, many years. And now my week ahead idea is being copied by everyone. Pisses me off, but or at least give me some royalties if you're going to borrow my ideas, people on TV. You know who you are. But a big shout out to everybody. Other good charts, if you want to build consistency. One of my traders emailed me this morning saying he's a swing trader in options. And thanks for the email, the kind words, I appreciate it. If you want to build consistency in your trades, and whether you're directionally trading the stock or you're trading the underlying option, you want to go for consistent charts as the first rule of thumb. Consistent uptrend. So if you do trade small caps, for Pete's sake, don't trade up and down small gaps that are choppy as heck, because you're not going to make much money swing trading those, right? You want to trade things that actually run like these picks that my small cap scans and all access members got. These are all picks, just a handful of them from our recent alerts. For large caps, APO is looking good. It's currently at resistance near that 50. It may be worth a shot if it breaks north of 51. Be on the lookout too for plays in our inverses, right? I've been saying that for a long time. We finally see a bullish engulfing, right? It's the first time, and candles are great. Be sure to learn candles from my colleague Steve Nissen at Candle Charts. This is the first time there's a hammer here, but it didn't really hold. I'm looking for signs of reversals that either failed or worked, because they do occur on occasion, you know, like a failed hammer or shooting star, or failed bullish or bearish engulfing. Yeah, this is the first time in 3 months at least we've seen a bullish engulfment in the SQQQs, right? Or a start of what could be a bounce. Anyway, keep an eye on things like SQQQ. Keep an eye on gold, especially instruments like Nugget. Keep an eye on oil. like UWT, because they've had previous really good strength, but then dropped recently. So they may be due for a pivot. But overall, we just want to go, focus on strength. Which are the charts that have the best directional volatility and have continued up and combined with a good trading range makes sense. Anyway, hit me with your questions. And Happy New Year, everybody. I wanted to wish you all the best. My New Year's resolution is to get more physically fit. I'm in good shape, but I want to get better shape. So my action item is, instead of putting all my exercise equipment in the basement, buy all new stuff, which I just did, and put it in the living room. So my living room looks like a gym. Instead of sitting on my butt watching TV at 8 o'clock at night, I mean, I'll still do that, but now and then I'll break it up with a 15 or 20 minute set, either free weights or something like that. As a trader, you want to be able to exercise your profit-taking muscle by focusing on charts that actually make sense. That's true. Yeah, Mukesh is saying, yeah, same here. Without good health, money has no value. Do I look for dark pools? Yeah, Chris, the way that I do that is I teach how to do tape reading. I'm the original tape reading expert in the industry as well. I started to sound like I invented the internet. I didn't, but I did come up with the origination of most of what you see in tape reading in electronic markets. I haven't been around since Jesse Livermore's Reminiscences of a Stock Operator Day, but in electronic markets, basically in the tape for dark pools and liquidity, we're looking for tells like large blocks. It just randomly showed up here, which is good. It doesn't have to be a 63,000 share trade, but main thing is you're looking for block trades in the tape, of 1,000 to 3,000 shares in a tape that's otherwise quiet with standard 50, 100 to 300 share trades. When it flips from red to green and you see a dominant proportion of trades going off at the ask in green, that's a dark pool tell, or poker tell, especially at new highs. Tape reading is primarily useful at new highs. Don't use the tape inside ranges as much. It's best to look for volatility plays, but volume in the tape. The way to spot a dark pool, breakout, you look for a sustained run of 5, 6, 8 block trades within a given 15-second window at a new high after initial breakout above prior highs, and that's a sign that you got some increasing liquidity. And there's a lot more I could teach, but that's the signal to look for. But yeah, good question. Hey Ned, Happy New Year to you too. My friend's looking for bounce in BA, but I told them that they're away. What do I think? Yeah, I'm not swing trading. I would not be swing trading financials right now. Hey Mark, let's see. Mine's also in LR. I use it a little. Interesting, Mark. Thanks for the heads up. All right, Wendy. Yeah, block trades are larger than most of the others. As a trader, you're always looking to capitalize on outliers. I'm a former statistician at the Ford Motor Company and a nationally certified quality engineer. I'm a numbers guy. Think of it like a bell-shaped curve, or like John Bollinger's brilliant invention of the Bollinger Bands. It's kind of like having a bell-shaped normal distribution curve outside price action. You're looking for outliers, like a B-band squeeze. You're looking for price that goes into the tail that exceeds, or say goes below the lower B-band for a pop on the upside, right? So you're looking for extremes. In the tape, similarly, you're looking for those outlier data points that aren't the majority of the 100, 200, 300 share noise in the tape. You're looking for signal in the tape. And I teach that exclusively at my Trading the Open live room, and have 2,000s of traders since the year 2000. So I'm working on my 21st year as a live room expert. Remember, small cap, low float stocks under $10 are for morons for day trading. I defy anybody who claims to be profitable trading small cap, low float instruments to show me tax return proof that they've had a winning year. What you see is a lot of bullshit behind, pardon my French, a lot of BS guys who are young, and seems like all they do is post on Instagram. What time do they have to trade? They're marketers. Anyway, the point is, you want consistent charts. And for day trade, it's fine to swing trade charts under $10 if they have consistent patterns. That's good. But day trading stocks under $10 is a fool's errand for complete idiots and people that don't know how to trade, and you'll blow up your trading account. I've heard so many stories of people that tell me the truth about the situation, and I've got my own millions of dollars worth of trade experience. The best instruments to day trade are instruments in the $15 to $40 a share range that have at least 1 million shares a day, 15,000 shares a minute volume, previous day's gainers, current day's minor gap and go or gap continuation runners that are small gaps above the previous day's high, and have nice big clean open range breakouts. And also be smart enough, like I was telling my live room members this last couple of days, that the market's choppy on the open and the trend, the ARMS index is near 1, which is flat, stay away from the market, or at least be more discerning in your trade setups. Hey Ahmed, no sectors have been strong lately. Big picture strategically, growth like the FANG stocks have been spectacular. Now's they've been bubbling up. It's a bubble market. It's time to take profits or use a 2-day stop, trailing stop on all open growth sector, meaning things like internet and Facebook, Amazon, Netflix. If you're trading any of those, the only decent sectors I would be in for any kind of longer term trades moving forward are healthcare related. There's healthcare related instruments, and if gold ever gets back on track and takes out new highs, gold and healthcare as defensive hedges would be an intelligent way to trade the markets for those of you who swing trade. But there are not any dominant breakout sectors right now. Everything has been pulling back, like pharmaceuticals, right? I've been telling you guys to focus on those all fourth quarter last year, but come the new year, stick a fork in it. It's done, right? Time to go to cash. Cash is king right now, all right? Or at least tighten up trailing stops on any open swing trades, because we're in a non-fundamentally supported momentum market with, like, one of the fellow guy who's really smart. I like Guy Adami on the CNBC Fast Money. Like he said, there's something like 20 indicators that are all flashing historic overbought signals. I completely agree with the smart guy. I share his approach to things. And the point is, be careful, tighten in trailing stops. And to learn how to trade the pivots and the inverse instruments when the market inevitably sells off, be sure to be part of my live room, as well as momentum breakouts and whatever's hot. These are all picks that my small cap scans members got, the GGB and the BE and the BLDP. Some really good directional volatility to capitalize on, but it's like the market's like an orange that's been squeezed slowly, and most of the juice is out of it now. I don't expect the market's going to keep rallying senselessly all year long or anything like that. I think we're more than overdue for a pullback. So play it safe, play it smart out there. And thanks for being here. Let's see if any other questions. I got just a couple of minutes here. Well, thanks, Bill, for the nice job on the picks. Solars, yeah. TAN. Hey, you too, Ahmed. Good health. And right, Chris, yeah, 2-day low support and resistance. Hey, Wendy, I don't have time to repeat about the tape, but ask me, I know you're live, remember, ask me Monday about the tape. But we're looking for a minimum of 5 blocks of at least 1,000 shares in a tape that has otherwise been characterized by smaller 1 to 2, 300 share trades, which is common for the active types of charts we focus on. When you start to see a sequence of blocks of large trades of 1,000, 2, 3, 5,000 shares come in green, at the ask, in a tape that's been otherwise quiet, that's a good lead indicator, a good signal that it's about to spike up, because you're drawing, it's like a sponge that absorbs water. The big block trades put on by high frequency trading algos and discretionary traders who are trading large size dry up available supply, which increases demand and therefore price, and therefore the price spikes up. So we'll go over some live examples next week and tape reading as usual as well. Hey, Ned. Yeah, Bowen. See, I don't have time to pull up individual charts. I got to run right now. I've got swing scans coming up in a few minutes. You folks have been great. Do be sure to join my live room and other resources. Now is a perfect time to be trading the markets. Go to cash at the first sign of trouble. Play it safe. Use position sizing. Be keenly aware of risk management. And let's go get them. Let's do well, okay? I think we're going to wrap up.